Alrighty. Making a video on my trades for this week. Um, or not this week, what I took today and why. Um, Greg kind of wanted to see what was up and how I had my charts marked up. Um, so right now, this is the weekly time frame. We're in a weekly range. What I want to see happen at some point is us come down and take these equal lows, manipulate the range to the downside to then move higher and take the highs. Um, but as you can see, we have a weekly order block right here. Um, and then this is something on a lower time frame. It's an order block because it's that color. Um, but as you can see, we've just kind of been bouncing between the two midlines of these order blocks, right? And price is just kind of compressing. So that's my overall view. I really, we had a big buy wick here, uh, but even though I'm still really, really wanting to come down here and take these lows. Um, so let's move to the 1 hour, and this is what I've got marked up on the 1 hour. If we go back and take a look at what price has done, right? We had this range right here. Well, we took the highs and then we displaced and took the lows. So here's our 1 hour dealing range at the moment. Okay. Um, and looking at that, we have an inverted fair value gap up here, uh, right at the premium discount of this quadrant. Okay. So we have premium and extreme premium up here. Um, then we have this fair value gap at the 7.5, and we had the huge opening week gap at the 5.0, um, and that was pretty much it. We came down into that larger order block and held and took off. Um, so what happened from there? Well, um, you know, we consolidated at the 2.5, manipulated that range to the downside back to the midline of this order block perfectly, and then took off and reclaimed the 2.5. So that was a good sign that we were probably headed up to the 50 into this order block. Okay. These order blocks, okay, that's fair value gap. Uh, these are on the 15-minute time frame. This might be a 1 hour. I got to start marking these better, I know. Um, but really, all I'm doing is marking up uh, key structure and then just watching how it reacts at that time, right? So, you know, um, today's the fourth, yeah. So 10 o'clock in the morning on the fourth or the third, yesterday, we had this big push up, which was could have been just a huge trade. Um, and then we consolidate right here at the 5.0. We break above the 5.0. Um, we invert the opening week gap. We come back down, break below, but hold inside. Um, and again, start consolidating just below the 5.0, right? And then this morning, let's move to the 15. This morning, and on the 15-minute, we will add our pivot points. Okay. So overnight, we had this big push down. We pretty well held that daily pivot point there. We pushed up into the previous close, came back down, retested the daily, and ground our way up, right? Until we inverted this 15-minute fair value gap at the 50% level of this dealing range. Now, this is premium pricing. Normally, you would be looking for shorts in premium pricing. But if you were watching, which I was not, and we just grind down for a couple of hours and right at 9:30 we tap the previous close, and then we go and take highs. And then we get above the weekly pivot point in doing so, and then this 15-minute candle also gets above the monthly pivot point. You could take a long right here, you could take a long right here, you could take a long right here. Wherever you wanted to take it inside this 15-minute candle, you could have gone long, okay? And had an hour's worth of up pricing, and I'm still not locking shit in, which is really irritating me. Well, let's just get rid of that one. We've been through it a couple of times anyway. Um, yeah, I mean, you could have had a good hour's worth of up pricing all the way to this daily pivot point. You could have closed it at the previous day's high, but if you had held on for a minute, you would have seen we displaced through the previous day's high and the current open. Um, and you could have taken that all the way to the daily, which is at this 1 hour fair value gap. Um, right at the 7.5 daily pivot point, midline for 1 hour fair value gap. This is where I started getting into the market. I actually got into it here when we pushed above the pivot point into the fair value gap and then failed to close above the pivot point. I went short right there. Okay. On the 15-minute candle. I was not looking at a lower time frame. I just took the trade right there. Now, this also has another confluence to it that we need to pay attention to. Our dealing range. Okay. If you put the retrace fib up on this dealing range, because it was displacement, um, you're going to find that all of this confluence area also lines up with optimal trade entry, the 7.0 of the retracement at all of this other confluence. That's too many confluences for me. It's one, two, three, four confluences. Um, that's enough for me to take a trade. Okay. Even if all I'm doing is looking for it to come back down to previous high. Okay. Now, my original trade was back down here to the 50 because I was risking above the 7.9. Huge. I mean, that's almost a 100-point stop. Okay. So with that big of a stop, I mean, what are you risking, right? Let's take that off. Well, I started the trade with only two micros contracts. So I was risking $400, okay, to win 797. Well, I needed to make $1,500 to pass a top step combine, and I had two other top step combines, fresh ones that I wanted to make max profit in. But you have to wait, enter and make sure I'm okay entering, you know, on this reaction. But I don't want to just start adding to the trade immediately on this down candle. I want to see what's going to happen. We haven't yet touched the midline. We haven't yet touched the 7.5. You know, I want to see what goes on. Well, we did go into some drawdown up here. We broke back above the pivot point, and then we went up and broke the midline of the fair value gap, and it rejected and closed below. As soon as this 15-minute candle went red and got below the high of this up candle, I added 5 contracts. Now I'm in 7 contracts. Now, when I add, I also get to pull my profit target up a little bit because now I don't need to go as far down to make my $1,500. So I'm going to take this off just so it can be seen better. All right. So I added in this 15-minute candle. Once we broke back below the 7.5 or the 7.0 and the fair value gap, I added again on the close of this candle, even though it was a pullback. Then we went up a little higher, and then when we broke the 50% of this wick, I added 5 more. Okay, that was 5, 10, 15. I'm in 17 contracts, And then on the very next candle, once we broke the lows, I added again, and I was in 22 micro contracts. And my profit target was now above the current open, okay, in this fair value gap, which I felt really good about. And of course, it pretty much very quickly went down and hit target. Um, so I passed a top step combine and I made max profit in two others. Um, and if I was continued to trade this, with this fair value gap made when we went through the previous day's high, once we came down and touched this fair value gap and touched the week opening gap again, and regained above the previous day's high, I wouldn't have even waited for this candle to finish closing. I would have just went ahead and gone long here. Okay, working our way back up to this pivot point or even the high. Okay. The pivot point would be a good area to take profit off. That's still a really good profit, 586. Um, that's almost it's 90 points, depending on where you got in on this candle. So yeah, very good trade could have been taken there as well. Um, could have had a huge trade this morning. Uh, then you get this reversal off of all of our confluence, and then you could get another trade. So you could have had three really good trades today. Um, but we didn't quite get there. So anyway, I'm going to close this off here. That was today's trades, and we will continue later.